Good afternoon. This Tuesday, July 9th, the breakdown continued in grains day for the soybeans as soybean oil did a big give back from last week's gains. Of course, the forecast on the GFS for rains to hit the drier areas of the Midwest here in through the 16th of July is what is prominent here, giving that area a drink. Now, if we use the Euro, it's not quite as wet through even the 19th when we do this window, but more moisture shows up for Nebraska here in the north and northern areas of Kansas. But nonetheless, the forecast is somewhat favorable, keeping the optimism of a record crop. We're pricing in basically right now about 182 bushel to the acre on stocks to usage. If we hit about $4 a bushel or $3.90, that's about 183 bushels to the acre. So we'll see if the trade wants to have us all priced in by mid-July. What is not being discussed at all, abject dryness continues and the heat. This is Ukraine, okay? Here's southwest Russia. Here's where the spring wheat is growing in Russia. The spring wheat crop, corn crop getting hurt, no moisture through Thursday, July the 18th. This is not good for our biggest competitor for trying to sell corn in the world. Here is the Black Sea. Here is Ukraine. Look at the heat lay in there, even in the southwestern areas of Russia, where mostly that is wheat for harvesting. But the corn crop, spring wheat crop in Ukraine is getting hurt. We'll figure that out probably months from now. And then, of course, the grain trade will have an opportunity to steal as much grain as they can on a lower board price. Recall in 2020, the USDA was dead wrong on demand. We were $3.60 corn on August 15th. By January 15th, we were $7 corn. Okay, I wanted to show you this. This is interesting when I talk about Russia. I've been mentioning 2010, how the crop burned up in Russia in the summer. Here's June. Here's July. She bottomed in June. This is our wheat futures for Kansas City, weekly chart. She bottomed and started moving up in July, but she exploded end of July into August on the recognition that Russia wasn't going to have wheat for sale. Is that going to happen this year? Well, not as easy, because in 2010, our dollar wasn't worth anything. We were garnering exports. We are currently the reserve of the world. But when you consider wheat supplies are down in Argentina, corn supplies are down in Argentina, Brazil, and now Ukraine, oh, we'll get some exports of corn and wheat showing up. They'll even pay with our stronger dollar, which is anticipated to weaken by this fall when they likely start lowering interest rates in September. So just note this 2010 move, how quickly things can change. Isn't it interesting? Prices weren't that much cheaper than they are now currently here in this $5 range. So taking a look at the wheat, Kansas City not looking like this bracket is going to hold. It's almost like they want to retest the May lows yet, even with harvest 2/3 done. It's like they want to bang it one more time before we get some kind of seasonal low. So be aware of that. Chicago wheat, possible pullback to that value that was made here in late June. It's performing better. If you want to trade wheat, buy Chicago December, sell Kansas on the spread. Very slow, but we should see this Chicago continue to work premium to Kansas City. Looks like our 60-day cycle lows are kind of doing something again here in the days. Here's your high, low, not quite there. But maybe this low, which was scheduled for July 5th, was a day off. We'll see. I do think wheat is in bottoming mode. French milling wheat has pulled back, trying to consolidate. It's below the 100-day moving average. Fibonacci-wise, slamming around the 62% range. This is the box between 78% and 62%, which implies maybe this center bottom might be something lining up here with this valley. We'll see. I think we're a week away or so from wheat trying to get something going. Or maybe it's got to take until the end of July. But Russia, I should say more importantly, Ukraine burning up, not helping. Russia has problems not only with their winter wheat crop, but their spring wheat crop. Corn, well, we had a simple wave 4, no fancy ABCs. Hurricane Beryl took care of that. We're in a wave 5. If we measure wave 5, we take this 1212 was 40 cents, take it off of here, we get somewhere around the 385 range, okay? Now, it can go extended if it wants, but we would anticipate 385, which obviously is well over 183 bushels to acre. Maybe it's 184 bushels to acre. We just play simple games of stocks to use ratio versus prior pricing and trying to even out the dollar when you compare it to prior pricing as well. So we'll see. Wave 5 is what we're in play until we are not. Soybean oil, we had said last week, watch for it to run out of gas near the $49.5, $50 range. That's exactly where it stopped, and a big give back as the Indonesia-Chinese trade war, still nothing in play. They didn't want to wait on this buy the rumor, sell the fact. Let's just sell it because, hey, grains rally, let's sell it. And so big give back. Do note, good support is going to show up here on any attempt back down into this 45, 46 cent range. Start looking for a buy to set back up in there. On soybeans, measured move theory, we've been discussing the wave count. When we did the prior waves, says this leg could take us down to about $10.40. Bean oil, meal probably will help facilitate that soon enough, and about mid-July would be about right for a timing turn. Crude oil, we've been rectifying that wave 2 was probably heading to the 786 retracement before completion. It stalled at the 62%, which was right there, but then she spiked up. I would say this, I believe this is wave 2. We get a recovery bounce in here, go short. This is likely a 1-2 and then a 1-2. Note this support here at the $79 range, probably doubled up with our 6-hour continuation support, which comes in just under 80. So look for 79 to 79.5, be initial support on a heavy break here. That's probably your 1-2, and then we'll get a 1 and then another 2 heading on down. So let's watch for that on crude oil. Cattle, I want to talk about today. I do think the board has put in a significant top. I know the market's on fire out there, but the board never worries about that. It's like if this was grains, we'd be dying way before the cash market ever tops. But nonetheless, if we did measured move theory, if this wave up was equal to this wave, we would have topped at the 189 range. Even the weekly chart continuation had 189 as resistance as a trend line. So now today's support, we closed right at moving average support, almost tagged the trend line. We've got this gap to plug. Look for some stability to try to find a support here. This will be a 1, get a 2, and then another break should start getting underway on these cattle. Box beef fell out of bed today. This is the time of year until August that the cash trade softens with the box beef. We'll see if this year is going to be completely different. I don't know. I don't like this topping feature with the trend line resistance setting this up. Now, look for live cattle trade here again. You can see the gap on the charts, 179, 180 initial support. Now, feeder cattle. I said this in the Weekend Hedger. I said this last week. Isn't it interesting? I have this bearish count to put together. This is a 1 here. You have a 2, and now we're setting up for another 3 down here. We're doing a 1, 2, 3, fourth wave. Fourth wave did not go above wave 1. You can see it right here. Every time now we've been making highs at the lower high on major moves. Major move, stop right at trend line, turn immediately down. Okay, trend line support, probably get some bounce tomorrow, but I would look for anything near 159, 160 is going to get sold. And I think these feeders are heading down. Is it maybe because corn's turning up after mid-July? I don't know. Trying to figure out why it is hurts the brain. I just see how the market's talking to us, and it just seems to be wanting to talk bearish. I know feeder cattle are on fire out there, but tell it to the August feeder board. This is not calves on July 9th. This is for calves that cash settle on the last days of August. That's what you're trading. Don't forget that. There's the continuation chart. If we break, you're going to get some pretty good support at 244 as we go back and look at this long-term bull market moving average. Just to zoom in, you can start seeing it here a little better. 244 range, 245 would be a target if they somehow got them to break down harder than they already have. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.